I think people are so full of financials that there's not a lot of players even looking at these stocks to begin with because of just the market structure in Canada. But there's some amazing companies that you can find in these non-bank financials, these niche lenders. Okay. So people get worried about the economy. People maybe don't understand Propel's business entirely. I know some people called and asked me if there were tariff issues. There's no tariff issues. They're a US lender. They don't actually make anything. These are loans, but it just goes to show you the things that people worry about. And then I think there was also been a lot of faster money in the stock that has been playing quarters. So I think what might have happened, and I have no way to confirm this, is you had some people who were coming into the stock for the quarter, Q4. The quarter was good, but the stock didn't move. So now these fast money players will exit. And what happens is then that will set off some of the machines, the algos. Then that will upset the retail investors who all of a sudden are looking at a stock that's down 20 or 30%. So now they're selling. And going back to what I was saying a few minutes ago, they're responding to price action without actually looking at what's going on in the company. If you look at the Q4 earnings release, the numbers were spectacular. And the guidance for this year is also spectacular. This company is giving guidance for a 30% return on equity. I don't think there's many companies, if any, in Canada that are doing that. So we have a very high growth company that's operating in a very large market, just in the US. Now we have UK and Canada as well. You've got a nice balance sheet. Right now, their cost of funds is a little bit high. They're working on to drive that down. So that'll be another catalyst. They've raised their dividend, I think, 6 times in the last 4 quarters. What I've said before about this company is it's something for everyone. If you're a growth investor, it's got a very high growth profile. If you're a value investor, you're buying the stock right now on 6 times earnings. Okay. If you like dividends, it has a dividend. So there's a little bit of something for everybody here. I love this company. I think you're going to see over time, and you can, hopefully we're still doing this podcast in 3 years or 4 years. I think this is actually a $100 stock.